U.S. personal spending rises more than expected. Spending in the U.S. rose by 0.7% from a month earlier in September, following a 0.4% increase in August and beating market consensus of 0.5% advanced. So what does this do to markets? How does it impact your trades? And let's talk about some setups as we go into Friday, as well as going into next week. So first of all, guys, let's take a look at gold here and see what's been going on. So price has been able to break through this level, this 1980 level, which has been a really big level of resistance for sellers. And I think that for now, buyers seem to be able to hold this area. I mentioned on my live stream here today that I think the path of least resistance is a push back up into the 1996 area. Gold seems to be on a bullish trend overall. And with this breakout here recently, it could look to still be in play. However, I will mention I am cautious on bullish setups for gold personally. I'm not taking any longs because there seems to be some talk of perhaps a negotiation between Israel and Hamas, which is one of the major drivers that have caused price to move higher in the first place. So I'm cautious on bullish setups. However, if we do see conviction to the upside, meaning a break above into the 2000 level, I'll look for possible trend continuation plays going into the rest of this week. Now, all of this stuff is really important because we have something really important on the horizon. We have the Fed meeting coming in on November 1st, and that Fed meeting is spooking the markets. Let me show you just how much it has spooked markets. When we take a look at the Nasdaq 100, the Nasdaq has been just tanking off of a cliff here recently because the market is fearful of what's going to be said by Jerome Powell and the Fed's standpoint going forward. Because here's the thing, the dollar's been real strong overall. One of the big drivers for this is because we've had so much strong economic data. Let's think about this for a second. We've had PMI numbers that were hot. We had GDP numbers that were hot. We had CPI readings last month. This month, CPI and PPI strong. All of these things are strong, showing the market or showing that the economy in the US is really strong. What does that mean for the dollar? Well, it means a strong dollar, but it also means concern for what could happen next in the Fed's playbook. If the Fed comes out with this big next level hawkishness, I think we make a quick move back up to the previous high at 107.18. And if we truly see hawkishness, we're going to go right through it and continue to push higher, right? Because again, if we see a Fed that looks at all this data and says, yeah, this is an issue and we need inflation to come down, so we're going to have to do more, the market is going to freak out and we'll be back to dollar strength to the moon kind of environment where the stock markets fall, gold falls, everything against the dollar falls like we had in 2022. So it's a really important time as we go into this November meeting. And again, with all the stock earnings that have been coming out, even though they've been strong overall for some of the mega tech companies, they've had great earnings beats. The market doesn't care. The market is concerned about what the Fed is going to do next, and we've got to keep a close eye. Again, we had PCE numbers today that did show some improvement on the disinflationary trend, which could perhaps be good, but it's just one tick in the right direction when we have several things in the wrong direction in terms of what the Fed wants to see. However, I've made this point, and I'll say it again, when it comes to the Nasdaq, I am very curious to see if there is perhaps a time for a bounce coming in, right? Despite all of this, a strong economy still shows that perhaps the consumer hangs in there, and a strong consumer could lead to people going and purchasing products, and that could lead to companies doing well. And so I still think that there's an opportunity to possibly look for Nasdaq longs. I was completely early on my previous attempts to get long in this area. I am waiting for price action to kind of show signs of reversal, in which case I might be looking to take Nasdaq long setups myself. I don't have anything on right now, full transparency, but I am waiting to see if we can find a setup on the Nasdaq going into the month of November, and we'll see if I'm able to catch something on that front. Let's take a quick look at Euro USD here, which the Euro has been pretty down in the last several months, but recently has ticked up higher. In terms of a price action standpoint for the daily chart, we've been consolidating here, and I would say for bulls, watch for a breakout here. If this does close, it doesn't look like it's closing this way, but if it does have some sort of bearish close for the Euro, it could lead to some drift to the downside next week. But right now, still kind of a choppy market overall. Let's take a look at dollar yen for my yen traders. We've made this point here recently. We did not quite get that strong close above that 150 mark that we'd been looking for. So no bullish setups. And in fact, I guess keep an eye out for the daily chart. For those of you guys watching dollar yen, if you get some sort of big push to the downside, dollar yen could actually even flip bearish, but not quite there, really just still choppy and consolidating, waiting for a breakout on this one. Now, just a heads up, we are looking at the COT data, which actually will be updated at the end of today. Every week on Fridays, we get the commitment of trader data that comes out and gives us an insight as to what institutional traders are buying and selling. And this data will be updating on Friday, and you guys have a really special opportunity to get access to this 100% for free. Today is the last day of our 2-day event that we've been doing on the Edge Finder. Again, if you have not already gotten your copy, click the link in the description. It's the very top one where it says just message us. If you'd like to message us, you can ask us for a copy. And again, this will get you access to the Smart Money Tracker, the commitment of traders data that we have here, all of our powerful tools, 100% for free. And again, today is the last chance to do that. So we'll be getting that updated information later today, and we'll be sharing probably some updates about it in our Telegram channel. So you can also join that using the link down below in the description. But again, message us, get your copy. Again, it is genuinely free to use, no strings attached. You just got to send us your email and we'll send you a copy. So there you go. And again, I think in terms of what the market is looking for in terms of COT, we need some guidance with all of this stock market sell-off and, you know, the dollar being where it's at. It'll be very curious to see what the institutional money has in store for us for, you know, this week. I think, you know, in terms of top setups, I want to talk about something else. So I mentioned I am still bearish pound USD. I've got a bullish bias. Well, we have no bullish bias on dollar yen anymore. It seems to have kind of fizzled out and lost its bullishness there. Euro yen, Euro CAD, Euro pound on the bullish side, pound dollar, UK 100, Aussie Swiss, CAD Swiss on the sell side. So keeping close eyes on those. In terms of where retail is positioned, I want to show you guys this. Here is your updated reading on retail sentiment. Retail sentiment gives us an idea as to what the amateur traders are buying and selling. It seems like they are very bullish on things like dollar Swiss, the Australian dollar, and the Kiwi dollar, and as well as the pound and euro. So bulls, the retail traders are bullish on these assets. So why does that give us a bearish reading? Well, it's because we use this as kind of a contrarian indicator. When I say we, I'm talking about Frank and I who built this tool, you know, together with our team at A1 Trading. So we've been building this tool for quite some time, and we like to look at what the retail trader is doing for a possible contrarian indicator, right? So if we know retail traders are very much bullish on euro and pound, we like to be more on the bearish camp. And same thing with dollar yen. If dollar yen, for example, is super bearish by retail traders, currently sitting at 83%, we like to be more on the bullish side of that trade, as we know retail traders typically tend to lose money. Again, like I said, just a reminder, this is totally free today to use our tools, our data, and again, no strings attached. You just shoot us a message using the very first link in the description down below. So again, guys, thank you very much for tuning in to this week's videos. If you enjoyed this, please hit that thumbs up button on your way out. We've got a lot of stuff coming next week with a powerhouse of a week with the Fed meeting. So make sure to click that notification bell as well, and we'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.